Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for Monday, January 26, 2026. Markets did some fascinating and wild things today. We are seeing major sector rotation ahead of FOMC and tech earnings this week that we have to talk about. Now, before I get into it, if you do find value in the content, I'd love to ask you for a favor to just hit the like button, leave a comment, or even subscribe. If you do watch this content daily and could do that a little bit over the next few days, it would be a huge help because I'm experiencing a bit of a shadow ban going on here on YouTube the last couple of weeks. I was at first wondering what was going on because I've had no new subscribers since the new year, and views were down to really about a third of what they used to be. It's just really direct links from my Patreon. And I was doing some research, and it seems to be related to talk about using leverage as one possible scenario, but most likely it's due to use of a few key terms referencing names of specific world leaders and events that flag my account as suspicious as someone that's in the education category. So while trading is inextricably tied to world events, I'm going to try to refer to things and administrations in general terms. Hopefully between that and your support of just showing YouTube that the content is actually interesting to people, that can help get me back on the radar. And I really honestly thought everybody was just checked out at the start of the year, but after seeing that massive drop in views and having friends tell me that even though they're subscribed and have the bell notification turned on, that my content wasn't popping up, that kind of made me dig into it a little bit more. Now, on that note, I did release a second video in the Options 101 series yesterday covering the Greeks. If you did not see that and are keen to check it out, look under the Options 101 playlist on my page, or it was the previously uploaded video from yesterday. So let's get into the week ahead, which is going to be a huge week for us. And we have those unsettled geopolitical events to think about, which I will just leave as that general description for now. You all know what's going on in the world. We also have issues with the Japanese yen, and there is talk of the US potentially stepping in to sell dollars to buy yen, which normally is good for risk assets in the near term, but is signaling to bigger cracks in the system for the long run. We also have FOMC on Wednesday, and we have a massive week for tech earnings. Seagate and Texas Instruments are reporting tomorrow on Tuesday. ASML, Microsoft, Meta, Tesla, and Lam Research on Wednesday, followed by Apple, SanDisk, Caterpillar, Western Digital, and just for the community, there's also Deckers to consider on Thursday, which we've been eyeing to re-enter for a trade. Today, we saw massive rotation between sectors, and that is very telling of the state of the market currently. We're going to look at all those sectors as we get into the charts, but broadly, financials are not looking very strong to me, and healthcare, while it was holding up, got hit hard after hours on the announcement of no Medicare expansion for 2027, which that sector of the market was definitely counting on. Now, we were talking in our Patreon weekly call this morning about the UNH chart looking shaky going into earnings tomorrow. Part of that was the chart structure, and part of it was also seeing the selling of UNH stock last week by members of Congress that oversee that sector of the market. I thought it might be related to earnings that they were selling UNH, but clearly that move was related to just unloading their broader healthcare exposure ahead of this Medicare announcement. Now, the dollar is also dropping massively, down over 3% in as many days. Volatility has entered metals. Many commodities that you think would be stronger saw weakness today, and crypto is mounting a little bit of relative strength at what I would say is honestly the last line of support before a bigger breakdown. So it's going to be another massive week. Buckle in. Thank you all so much for being here, and let's get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting on the S&P 500 on the ES1 futures chart, because I wanted to illustrate for us the gap down we saw over the weekend into the overnight open, which actually, was here, sold off and really rallied throughout the day today. Sold off a little bit at the end of the day, but the S&P 500 and NASDAQ did well, and now are up again in the overnight hours and are really looking to potentially break over a key resistance level. So the futures chart is looking strong. We still have room to run on RSI and on mean reversion. So this overall is looking promising. And if we just pull up the SPX on the daily time frame, you can see how on the daily time frame we have been recovering, but we are still right into this trend line from our breakdown. This, again, if you have not been here, has been holding us up since the April tariff lows of 2025, bounced off it for support multiple times, and now have been rejecting. So this is the point we have to hop over. Now, in the overnight price action, the NASDAQ, or the NQ chart for the futures, is even stronger. We had that same gap down over the weekend, massive selling yesterday evening on Sunday, and rally throughout the day, and now is pushing through a key resistance level overhead. If we bring up our confluence model clouds here, you can see how we are already into the upper band for the NASDAQ futures, where we were right below that for the S&P 500. So we're through that resistance, also have room to run here on the RSI and mean reversion. Even though those are getting a little extended, those can keep going for a bit longer. And if we do look at the NASDAQ chart just on the daily, where we're not seeing this run overnight, but the key level we need to get over is that 25,850 roughly, this horizontal line. We tried to reclaim our trend line breakdown today, so the NASDAQ is showing relative strength, and strength is coming back into mega cap tech. We'll look at that in just a second. But overall, this was a good sign, and the overnight price action, I think, would have us right into that resistance point. So let's watch that into the open for the NASDAQ. And if we do pull up MAGs just for the Magnificent Seven, you can see that relative strength, how this really had been underperforming the rest of the market since the 26th of December. And the last 4 days has mounted a very, very strong recovery with a lot of money flowing back into mega cap tech ahead of earnings. All right, and I've just got my sector watch list up here to go through a few other indices and sectors. So first we have the Russell, and this was fairly flat today on Monday. Friday we underperformed. Broadly speaking, the Russell has been outperforming for small caps, but a neutral day on Monday, so far up a little bit overnight, but not showing the same strength as the S&P 500 and the NASDAQ. Now, the HSI, on the other hand, we were just talking about this last week, potentially showing a breakout. And this is showing a lot of nice strength today. I got back into Billy today. We'll look at that in the individual charts. But I'm wondering if this is going to break out from the flag pattern that we've been tracking here. And I'm sorry for the multiple lines, but we've got a couple different drawings going on here, and we'll clean that up. There we go. That's a little better. Let's hit the save button. All right, now SMH Semiconductors has been underperforming the last 2 days. We saw that with things like ALAB selling off today, NVIDIA a little bit weak, and mounting a little bit of, I guess, at least leveling out, even though those assets did sell off. But we do have a doji candle on the day today for SMH. I would suggest that just looking at the individual charts of ALAB and a couple others, that there's maybe a little bit more to go, but they should find their footing before too long. All right, before we get to the rest of the sectors, let's just look at the dollar, gold, a few others, and you can see that the dollar has just been falling off a cliff the last week or so. If we measure that from the high on the 15th of January to where we dropped, well, 2.73%. I said 3% in the intro, but you know, what's 27 basis points between friends? The point is we are breaking down. We're in the lower band on the daily, looking like we are heading into another downtrend. If we look at this on the 4-hour, we've clearly taken that first swing in the lower band, and we are very much diverted to the downside. On the 4-hour chart, this would suggest some kind of bounce incoming because of how strong the selling has been on the dollar. But if we bounce, I would expect some rejection, most likely at 97.7, 97.8, somewhere about around that point. All right, now gold and silver. We've got silver on the right, gold on the left. Just volatility entering like crazy today, with silver getting up. What did we get to? Almost $120 an ounce. We got up to just under 118 and then sold all the way back down to 102. A massive, almost 20% swing there, wiping out, I think it was close to $1 trillion. So a third of the market cap of crypto wiped out in that move right there in silver, which is absolutely massive. So volatility has definitely entered the room, and now we rallied up overnight and seem to be finding some resistance again at 110. I'm not going to try to predict this as the top or what's going on, but I think a good reminder for us, if we just go to the silver chart, is to look at the monthly once more. And part of the selling today was related to, I think, collateral requirements increasing. So that could definitely be part of it. But any time in the past, as we've looked at 2011, and we're off the charts now with this move, but vertical move in 2011 came back down to earth. Vertical move in 1980 came back down to earth. We had another smaller one here in 74. And if we go back in history, we really have to blow things up. But the point is that the markets don't like abnormal moves. And while this has run for quite some time and we're supported by volume, it's not going to last forever. And, not only are news driving this volatility and selling, but this is really hyped now as a trade. So anyone who gets in late, if bigger institutions start taking profits, those late players are going to start panic selling, which ends up causing a bit of a cascade to the downside. So don't chase a move like this now. If you have been in this, congratulations. I would personally recommend locking in some profits because of how far this has run and how vertical it has gone. But, everybody is free to make their own decisions. All right, another one that has gone vertical and a massive short squeeze, and with that winter storm, just so news driven, is natural gas. And I would have thought we would reject somewhere around $7. Now, we did get a little bit beyond that to $7.43, sold all the way back down to $6.60. So massive volatility entering natural gas as well. And the reason I was thinking around $7 is because that is the range. Well, actually $7.50. Maybe I misremembered that, but looking just at these previous areas of support and these previous highs in that run in August of 22, I thought that would be kind of a natural zone for natural gas to find some resistance, and that's about where we landed. Now, is this going to come crashing down right away? I have no idea. It definitely was quite the run, and if that cold front passes, things could happen, but I would give it a bit of time before going short on this. This can, even if it pulls back, can grind around and go higher, as we've seen in previous runs, although really a vertical move like this is fairly unprecedented in recent history. All right, moving over to XLF, where we've been scouting this breakdown from this rising wedge, which we attempted to break to the upside. Looks like we might be breaking down. Still a little early to tell, but we can look at it on the 4-hour for a bit more detail. But if you're ever keen to zoom out to the weekly, the interesting thing is the price target is right about at the breakout zone for XLF, where we were scouting that breakout for this sector just a little over a year and a half ago. So if we get into the 4-hour and we zoom in, the reason this gets interesting is because we had our breakdown, bounced up today, saw some strength, and we rejected right from the underside of the wedge. Now, yeah, we've wicked past it a little bit, but we are clearly in the lower band on the 4-hour. We're not quite there on the daily. And this is hinting at strength. Yes, we might find some support at the 200-day moving average. If we look on the daily, we have the Confluence Model Center cloud right there. So this isn't going to be a breakdown that happens overnight, but you could imagine price getting to the Confluence Model Center cloud, 200-day, maybe we bounce, maybe we chop around and eventually break down. This can take weeks or months to unfold, but it's the first sign of weakness there. Okay, XLE, also a bit of weakness today, and if you are in any of the nuclear names, you know that those were definitely hit hard, recovered a little bit in after hours, but broadly speaking, we are still in an uptrend for XLE on the 4-hour, and on the daily time frame, we are getting close, to hitting a level where we should see some correction or cool off soon. But it seems to me with this expansion in the upper band, even if we see a little cool off for a few days, this is something that could head higher. And to give us a sense of where we could head to, we could take a little measured move, just do something conservative from this drop here. And if we take that, let's take it to our actual breakout because we back tested this for support a couple times before actually moving away. 54 bucks. So let's keep that on there as a rough target for XLE. Now, XLV, healthcare, this is the one we got to talk about. Now, if we were just talking about healthcare, looking at the daily chart, we would not see anything. But if we bring up the after hours on the sector here, you can see that selling step in on that Medicare announcement. But I think the more interesting thing to look at here, because we've been consolidating a little bit, are having a hard time breaking above 160 roughly, is if we pull up UNH. And there are other names that were hurt by this as well. But UNH, there's that example of the Medicare news impact on this stock. And top to bottom, just on that one candle, dropped as much as 10% in one 4-hour candle there for UNH. So massive impact and earnings tomorrow. So watch out. If we are looking at this on the daily time frame, we have been making higher lows on this recovery. But this does appear to be a lower high. We have a mean reversion dot. We can't get up to the top of the range on RSI. Maybe this can push through, but we're starting to squeeze on the daily. This looks suspiciously like something that could potentially break down. Now we are at this lower band, so let's let price action lead. We are above the 200-day moving average. Maybe, you know what? I'm going to stop myself because I think I'm a little biased against UNH. There is absolutely a chance with this sell-off. We're above the 200-day moving average. We sold off to about this range where the confluence Miles Iron Cloud is. We could absolutely jump on earnings, consolidate, and head higher. Let's let the price action lead, and I will stop with my speculation. But there are a few signs that are hinting towards a sell-off and this being a lower high. All right, biotech got hit a little bit today too. But the thing I like about biotech is that it actually back tested this flag breakout. So we pulled back, bounced perfectly. Yeah, a little wick underneath. But all in all, that's where we would want to see support step in. So if you are in biotech plays, watch this as just a lead for the individual companies you're in. And if we can hold above this zone, that's a good sign of strength. If I am looking at biotech just on the daily and I'm looking at just the swings in the upper band, this is honestly looking a little bit tired. When you start seeing the bands curl over like this, normally you go into a bit more consolidation. So let's keep our eye on the daily too. We definitely have a bearish divergence with the lower highs on the RSI, higher highs in the prices. If this level can't hold and it can't mount another strong rally here, that would be a little bit of a concern for biotech, which has been leading for, months now. All right, and last one for the sectors, consumer staples, still holding on for strength. Now, we're not moving at the same clip as the rally we saw a couple of weeks ago, but we're consolidating and grinding higher. Even if we see a correction here, which is most likely, I would anticipate that we might see a couple of swings higher for consumer staples as folks still look for a little bit of a safe haven to position a bit more defensively. And we can look at this as a large flag pattern as well. And let's just see what we got over the top here. Yep, we got a little bit of resistance here. So we're touching this point for the third time with our move today. So if we pull back and test this again, we could see a fourth time breakout, and you could measure this out as a bit of a flag pattern. All right, let's look at a few individual names ahead of earnings. Tesla is struggling a little bit at that 450 level. So we're making even highs there. If we are going to see a recovery here, we would want to see a bounce soon, somewhere between 435 down to 426. And that would give us a lower high and the potential of a recovery there on Tesla. If we break down, that would obviously not be a good sign. And we have earnings on Thursday to watch for Tesla. If we switch over really quickly to the watch list and we look at Adobe, now this one broke underneath a multi-year support last week. And I'm wondering if this is just a wick below, just a quick sweep of the lows, some deviation before continuing higher, because we are very oversold on the weekly, on the daily, all the time frames. We really have all those stacking up, 4-hour, daily, weekly. And we got back above 305 today and closed back above there, which is making this a little bit better looking for a potential entry. Now, we will obviously still have resistance overhead at around that 323, but in terms of oversold conditions daily and weekly, and continuing that bullish divergence on the weekly, this seems like a decent play, and we are still, even though we broke down from this trend line, making higher lows compared to that last low on October of 2022. All right, now ALAB we have to talk about because I sold my April calls into the close just because they're short expiry, because we deviated from our RSI uptrend here on the daily and on the 4 hour. See, on the 4 hour, we closed back underneath this point on the RSI uptrend, which doesn't mean the overall trend is done. We're going to print a mean reversion dot soon. And honestly, the 4 hour is very close to support here at 160. If we don't find support there, then I'm looking to this trend line and the 50% at 154 for a bounce, which would still give us higher lows. But I was even pretty much on my trade for my entry for those April calls at that point. And with shorter expiry calls, I just want to be nimble. And if we do see more downside, I'd rather get back in lower. Now, I might miss it, but that was just me also taking a bit of risk off the table into a undoubtedly volatile and uncertain week. So just using this little guide as a leading indicator. But again, if we look at the daily time frame, we just need to break above that 60 or the 59 on the RSI. We're still making higher highs, higher lows, higher highs, and anywhere bouncing above really 155 or so would still give us a higher low and that chance at continuation to the next price target at 200. So I haven't given up on ALAB. I'm just personally being a bit more tactical with my trades. Now, in terms of ones that I think are starting to look interesting, HIMS is really getting to that point for me where I'm looking for this to land in that $26 to $28 zone on this trend line and find support around these local swing lows. We also have earnings coming up on HIMS on Monday the 2nd, so a week from today. And institutions have been scooping this up. When you look at the monthly institutional inflows, even though price is down, they are continuing to buy HIMS. So we're seeing a little bit of strength today. Might this be the turnaround point? Possibly, because we are actually into a lot of these highs right here. Let's just bring up the confluence model bands and see if that can give us any more detail on HIMS. There we go. We're just into a bit of resistance here. So I wouldn't be surprised if we reject a little bit more on the 4 hour and on the daily. Yep, we're still clearly in a downtrend on the daily, taking that third major swing now. So we often talk about 2 or 3 swings in the lower band, and we've taken swing 1, swing 2, swing 3. So are we going to attempt that recovery here, or is this going to continue a little lower and then attempt that recovery? But I think we're getting into the strike zone. All right, looking to the fintech side, I want to look at Coin, but let's talk about Hood really quickly because I'm being a little bit cautious with Hood now. We are just flirting with breaking down from this lower support, and what I'm looking at is this trend line right here that we've broken down from, got back above, and are just chopping around that point right now, around the 618 fib level. But more importantly, we're in the confluence model lower band now. So we broke down, rejected once, and the question is, are we going to fail that 200-day moving average and take some swings lower? So I've got my eye on Hood, not entering any new positions, but if we break below the 200-day moving average, I am going to hedge my long-term hold position just a little bit with, I think, either an inverse ETF or some puts. I still need to decide and see how violent that breakdown is. If I do it with puts, actually now, while there isn't a lot of volatility, would be the time to get that hedge in place. All right, Coin got into the strike zone today, where really I would be interested in entering again, which I know sounds crazy with how weak crypto has been. And sorry, my other computer is disrupting the flow here. But the level we got into around 20, what did we get to today? 209. 206 is where I'm starting to pay attention. And you know what? Let's just move this down a little bit because that would complete our gap fill. We bounced off this trend line today, but I've been looking at this gap fill and this price action in the past as an area of support for Coinbase. We've taken swing 1, swing 2, now we're taking swing 3 in the lower band. We're starting to see a bit of a bullish divergence on the daily. All signs are pointing to a potential turnaround here or some kind of relief rally. And, we're seeing much more in the press regarding both the Clarity Act, and I've seen a lot of interviews as well from the CEO of Circle talking about banks integrating Circle and stablecoins. So will we get some news on that? Could that buoy coin for a little bit? Could that help with the crypto side of the trade? Quite possibly. And what I like about this level is that it gives us a clear invalidation. If we break down below 200 in a meaningful fashion, it's like, okay, then just get out of the way and let the dust settle. But this is an area that makes a lot of sense for a potential turnaround. Okay, Celsius, I got out of my March calls today, my March 20th calls, because we broke down on the 1 hour chart, continued to sell off. Now we are into this little flag zone breakout area. So if we are going to find support, this would be the point. If we break down more, then I would be looking to reload once we actually get into some price-based support. Probably around 50 would be my logical target, or 49 rather. So let's keep an eye on this day to day, but I just want to lock in that profit because it has been a great move from our entry down here in the middle of December. All right, and let's just look at crypto before we call it a day. And Bitcoin bounced from really the last line of the support, the Confluence model lower band, twice actually now. And we're seeing a bit of a recovery. We haven't passed any of these swing highs. And until we pass 91,500, which is this previous swing high, I'm not convinced of any recovery. So if we see a higher high, higher low, I am all for getting back behind crypto, but it has a lot of proving to do at this point and really holding this as a last line of defense before further breakdown. And if we pivot over to Solana really quickly, Solana is also showing some strength, giving us a bit of a double bottom here from that low on the 18th of December. We are oversold on the 4 hour, starting to recover in terms of mean reversion, double bottom on the 4 hour RSI too. We've taken our couple swings through the lower band. We're going to hit resistance here soon at about 126.6 or so on the center band. So that will be a major hurdle. On the daily, we are, we wicked below actually our relative support on the daily, but we're back within the center cloud. So perhaps this is deviation. We definitely need to watch it, but I would say look to Bitcoin as the leader, and then we can watch the smaller caps from there. If we are looking at this on the 1 hour, you would say, okay, we're starting to hold the center band on the 1 hour, but it still has a decent amount of proving to do. Okay, there are so many more names we could talk about, like LWLG and LEWS and others, but the video is getting far too long. So let's just talk about USAR with the big news over the weekend of the US taking a 10% stake. We've been in it since 14, mentioned the trade again when we were breaking out of this trend line, and we've now exceeded actually our daily candle closed right on the price target of 2668. Amazing how that works out to close right dead on the price target. Now, if we look at the 4 hour, this is where things get absolutely nutty. Over the weekend, price jumped up to as high as $40 and then saw a massive amount of selling today. And we did close the day below the 50%. So I sent a post on Patreon today. If we see a daily candle close or multiple daily candle closes below the 50%, that is a sign of weakness. But if we look at Intel in contrast, Intel ran for months after the US, not months, a few weeks after the US got involved, was up over 70%. Now this, just over the weekend alone, that pop was 67%. So this is a far different beast, smaller company, much more volatile. We are finding some support now. And I'm just giving this a little bit of time. I could have locked in profits this morning, but I figured now that we have this variable in play, we're now looking beyond the price target and seeing if we can drift back up to that $40 target. I thought we would sell off maybe a little bit more to close this gap at 24.80. But let's take this one day at a time. It's definitely overheated, but these things can run longer than you sometimes think when volatility enters. And if we break below that 2480, then I would get out of the trade and it would still be quite profitable at that point. But, it's a smaller position, just letting it run to see what it can do. And if we just pull up the REMX ETF, which is honestly probably a safer play, but this is running well on its way to the flag extension, also had a negative day today. So a lot of rare earths, a lot of metals saw volatility, names that you would think would perform well. The money in the market was definitely rotating today, but let's just watch to see how that develops this week. Okay, so that is it for the charts. This week, I'm really slowing down my entries. I'm going to take profits on some commodities trades if they are getting to good levels, as we looked at with USAR. The indices are really at an inflection point where we are right below resistance, potentially breaking through. And the technicals on the larger time frames are pointing to something similar, where we're getting very similar reads to what we were getting in March of 2025 before the tariff breakdown. And the last time we had reads that matched that setup was in 2019, which was actually before a run, which really corresponds to this inflection point of we are at a zone where we could easily just hop over a little bit of resistance and continue a run higher, or we could reject. So I'm going to let FOMC and tech earnings lead, because as we've been saying for months now, 2026 is going to be a year where earnings matter much more than they did in 2025. And in 2025, we did have an earnings-led rally, broadly speaking, but now it's about picking the winners and losers, seeing which companies have strong fundamentals, which ones do not. So we'll let the charts lead, and then we will react accordingly as opposed to trying to predict. And I'll see you tomorrow for another daily market recap. Bye for now.